Audio morning brief of the U.S. stock market. I'm Rich Paz for Critical Point. It's September 5th. It's 9 a.m. Eastern Time. Working on processing the weekly update. It's even longer than normal, but I think I got some good stuff in here as how things are going to fluctuate on into next year and where we're going here the remainder of this year and during the month and this and that. All right, for this morning brief, we're looking for a level 3 bottom. That if it was not placed yesterday, I believe it won't be placed till Friday, Monday. There's a possibility it won't even be placed as late as next Wednesday. That's about the latest we're giving it. We got a time frame, and the model saying the odds are increasing the bottom sooner rather than later, but it is allowing that long of a time frame to find that level 3 bottom, a monthly kind of bottom. We believe the market is rallying, towards the Fed Reserve, but I now think it's going to have a struggle. We're all debating this of what it's going to do, but I think it's going to be a struggle now as they wait on the Fed Reserve. They're looking at that inverted yield curve that has come back to flat, and that is a warning for them. We're on our way to a recession. The problem is, I still say it does not work all the time. The person that designed one of the better studies of that, and he used to be the Fed Reserve, he was saying this whole inverted curve just doesn't have to work every time, all right? And quite a while ago, he said it wouldn't work. Well, now, I guess I don't have to understand just how long they're willing to give it and won't give up, and maybe they think they finally got another opportunity to be right. I think they'll be wrong. No recession. That's my forecast. No recession. No way. No how. Things are that good, that strong still, but things are slipping. And they're concerned the Federal Reserve lowers rates, and there's a bit of a history that the economy, if it was starting towards a recession and then they lower rates, then it slips into recession is what they're saying. So they're also saying the stock market does the same thing. It backs off once the Fed cuts. We may be seeing it. We may be seeing people who've been betting all along the Fed's going to cut and the economy's still good enough, but now the Fed has broken the economy, and now it is time to sell even though they're cutting rates. I don't buy into a lot of that, and I explain a lot of my thinking of different types of players in the bond market that are driving these interest rates lower. But we've got the crude oil off quite a bit and others. So again, it's creating this discussion, can things slip more and at a faster pace? Now, I do think there's a possibility the stock market wants to get deeper into that gap on August 15th. All right, so do check those prices levels there for the S&P 500. And look at the gaps on Dow Jones. That has to come down quite a bit more to fill its gap. And then look at NASDAQ as well. However, do we want to make, I don't want to make too big of a deal out of that gap stuff. In other words, I think if they want to put it down, that's okay. And I think it's just going to be a floor price to bounce from. I think we're just dealing with some short-term, very short-term, seasonal trading, adjustment of portfolios, readjustments here, and various types of issues and news where they can make a big deal out of the news, and it's almost always an overreaction, But watch the interest rates. Do allow for a bit more slippage here. Do allow that if we are right and can pick its head up ahead of going into the Fed Reserve, that it may be a struggle on us. And do keep in mind that likely in October they will sell, and they may sell sometime September and October. But are we in a down move from now all the way into that October bottom? I don't believe so. I think the market will pick its head up. For those of you who are a little pessimistic or not as bullish as I am, or you're even bearish, you do want to consider the high of the year can be that minor long-term top. The rebound we've seen in the last week or two might be a knee-jerk reaction that's very, very close to that top. It may be that someday we'll look in the history books and they would have said, you know what, the market gave everybody a second chance to get out, And yes, it can drop into October, but I think it's coming down now. They're going to give us like a third opportunity to sell it a little later, and I will do my best to catch that level 2 top for you this month, and then we'll get a drop in October, and then we'll buy it, And as you zoom in faster on those level 3s, I think we got a bottom coming now into early next week, and it's going to be higher next week, And we'll take it one step at a time. For those of you interested in the very fast trading to the level 4s, I think the market will be up tomorrow. And I'd like to see it up from today into tomorrow, but it is possible it needs to stay down all day. And it, again, may have to do with this yield curve stuff that's now the big talking point, and some of these economic indicators slipping here. And we got a jobs report out on Friday that may bother them. And we also have the PMI services that may bother them, because the PMI manufacturing bothered them a little bit this week here. So those are the things we got to deal with that are against us here. And yet, at the same time, it was like someone on the New York Stock Exchange floor said, yeah, but you know something? Has really anything changed in the overall stock market and economy? And the answer is no. It's still long-term bullish. Past results are not necessarily indicative of future results. Get a chance, check out that weekly update. Yes, it's extra long, but at least you can stop it and start it and look at some of it over the weekend. And as normal, I put in the very fast stuff, short-term stuff right up front, in case you just need a quick little update where we're going here in the next few days and get some insight. Thank you. Have a great day.